Hey folks, good morning, good day, good afternoon, evening, and all that, just depending on where you are in the world, I suppose, yeah? I appreciate you taking the time to be here. I hope that you find this to be very fun and entertaining, more importantly, educational. So anyway, we'll get right out to it. In fact, we really need to get right out to it as fast as I possibly can because I have a target here at 40.50. Let me, so read through the disclaimer. You should have done that already. This is, of course, for educational purposes only. Let me see if I can get you out there pretty quick. There we go. So quite possibly not what people were expecting, right? Meaning, who does that? Who goes out and buys after an extreme decline in price? Well, if I had that, let's say that Ford F-150 that you've been dying for, and for whatever reason I have to, leave the country for a family matter and I just have to get rid of it today. So I paid $90,000 for it, but today only I will sell it for $50,000, and it has 57 miles on it. If you think about it in terms of that, right? But no one in their right mind could think that way, I'm being sarcastic. I hope I should be careful because many of you are coming from the event. You don't really know my demeanor, and I like to joke. I'm not very good at it, all that good stuff. But I'll make attempts here and there. So anyway, as I'm joking around, there is a literal sense to my comments as well. Okay, we're going to go through a bunch of stuff today, and I just figure, this was good. Now, to be very clear, this was talked about yesterday, so it's not anything new or well, there is something new, but we discussed what we use is called an if then else and a process. So a bunch of you, let me see. Hold on. Let me see if you're in the room today. I don't know if you. Okay, not yet. At least I don't know. I hope you got the notification, because we usually don't have class on Fridays, right? So, but there are members in the room as well. So anyway, is it going to make this 40-50 target? I have no idea, folks. Definitely turning from our supply level right now. And quite frankly, when it hit this 40-47 3/4, it's not typical that I would let this go all the way back to break even, because that's what this down here is. We'll talk about that in a little bit, the labels and everything. That's my orders. But it's not very typical that I would do that. However, as I was coming into the room, it was one of those things that I said, you know what, just let it, I'm not going to mess with it. I'll just let it play out. But the point is, I guess what I'm trying to say is if it comes that close to a target in a market condition like this, I'm just very, cautious on that. Not cautious, aggressive, I should say. Is a little bit of a better word. So you'll see there basically what has happened, and this is excellent because we're going to be doing this today. A lot of hopefully we're going to have a lot of fun by doing it. You can actually see that I have. I'll show you in just a moment. I've already done it over here. You just don't really know it yet. But I'll show you that here in a moment. The same way that I entered this was the way that I entered this based on the entry zone. Let me just recap this real quick so the members in the room. So I'm not just saying, hey, this is something that we talked about yesterday. I always like to actually do a recap where they recall exactly what I said, and then, of course, can go review the recordings if you desire at any time. Yeah. So yesterday, to be very clear, we had it was this really specific level, and I had to go back and remark the lines, but it's basically this area right here. And I'm sorry. You can see the lines. I don't need to be perfect with this. But basically, remember yesterday price was trading up like this, right? So we came into the room yesterday and we actually sold the market, right? So when most people are looking to buy, I'm not saying that's the reason we're looking to sell. That's definitely not what I'm saying. But it doesn't hurt, right? And the reason for that is because, as you all know, in the financial markets, in a general sense, we tend to do the opposite of what we would do anywhere else, right? I was making the joke earlier about the F-150 pickup truck. I mean, it is a no-brainer. It's a brand new pickup truck. You have a situation, and you're telling me that you're going to give it to me for like, 40. I think in my example was like 40,000 off. I would be crazy not to. I don't even have to think about that. It's just a done deal, But yet in the markets, you see what happens. We get emotional about it. When we see this big, red candle, and when we see it dropping fast, we can't get excited about it like we would about the truck. I'm just using the truck because it's like, I would be super thrilled to have a brand new F-150. So I'm just joking around and using that as an example, but it could be anything that you really want to buy. It could be a 57 Chevy, that's like a super antique-ish or whatever. It doesn't really matter. But the point is, I personally would be very excited if you told me, if I could do that, or if the dealer or whomever told me that for whatever reason I can get it for $40,000 a day, and normally I'd pay $50,000, right? There's no hesitation. It's an instant excitement. Well, here, what just happened this morning is that. It just happened in a matter of like a minute, okay? And it went exactly to where we already said that we thought that it was going to go and likely turn. Now, it did penetrate, so let's be clear about this. And again, I want to be clear about what I said yesterday so that everyone understands how this works. Because that's why I was looking to see if the member was here, that particular member. And I don't know yet. There's a lot of names to scroll through, so I'm sorry. But because we were going through this whole thing about, trying to understand location and trying to understand how we wouldn't just go out and randomly start buying or even using every level that we see on a chart. That's irrelevant. And we said this is the very specific location in which I would be a willing buyer. So what we find to be extremely just mind-blowing, okay, mind-blowing, is when you're listening to the news this morning, right, maybe you are, maybe you aren't. I would encourage you probably not to. I do, but I've focused on it this year just to prove my point to myself, really. We've had this discussion in the live room many times, but it's really just a personal thing. I don't focus on the news. In fact, if it's anything, it hurts me, not helps me. And so this year, though, we've been so ingrained in inflation and everything, and going back to 2020, we had these conversations where I kind of told them what I thought was going to happen over the next 3 years. And it's just this thing where finally I said, you know what, just to prove to myself, I'm going to focus in on the news this year, right? And so that's really what I've done. And in the live room, we've talked about it. I've kind of kept you all updated throughout that process, and it has more than proven my own personal thesis. So today's just another example of that, right? So proof in the pudding, whereas here's what happens. Yesterday we had this in-depth conversation about inflation, right, about what the Fed didn't say, and so on and so forth, right? And I've been telling you for months and months and months about the labor market, about this and that, and what, so on. So just all this stuff, but then you think about it today, it comes out, and they have all this, these very positive job numbers and so on and so forth. So in a normal environment, that would be a great thing. And it's even a great thing, and I want to be clear, it's a great thing today, in my opinion, too, because we're still strong. We talked about this yesterday. The economy, we are strong. That is America. Like, it's super strong, But the Fed is going to win one way or the other. And there is that expression, don't fight the Fed for a reason, All right, so what they're going to do is this or that or whatever. They're going to do what they're going to do, but the markets work on anticipation. So it has these knee-jerk reactions to something that it doesn't even know about yet, right? We talked about this yesterday, whereas we said the Fed made people think something. It was like honestly, it's not a literal facade, but I'm saying it just kind of seems like a facade where there's so much that they didn't, or Fed chairman, remember we talked about yesterday how all the others were even saying the opposite of basically how he sounded yesterday. So then he comes out and he says, he basically didn't say more than he said. And that's intentional. So he comes out and he says certain things, and it made it sound like softening, right? So that, of course, as we previously discussed, would vamp up the market, give it a good rally, whatnot. And then today, what happens? You come right out and they get positive job numbers. What have we told you over and over and over again? Those positive numbers, it's going to cause knee-jerk reactions, but it's not because of any conclusion. It is because of just knee-jerk reactions. They're thinking that with positive job numbers comes more Fed rate hikes, okay? Comes more, like, in other words, it forms this thought process around, oh my goodness, now the Fed's going to really beat us down, as if they haven't been doing that already, as if Amazon, Apple, we talked about this many times, but I don't know, Tesla, Twitter, all these companies, layoff tens of thousands of people. So, the information that they're looking at is lagging. And it for the most part, it always somewhat will be. We just need to read through the weeds, right? Make sure we understand and conceptualize the information. So what's ironic, though, is that you're watching the news this morning, maybe as I said you were or you weren't, and no joke, they come out, it's astounding to me, they came out and basically, as the numbers, they started to just, as market is dropping very abruptly, started nailing down on why it's going down, right? True story. This is, again, it's kind of blows my mind, but this is what happened. And then the market stopped, okay? The market stopped dropping. Now, the market stopped dropping I'm going to say approximately, at the area that we already said 24 hours ago. Now, remember, when I'm talking about stuff like this, this is not me doing this, it's the market. I am literally a translator. So it doesn't mean, oh, wait, we're magical or anything like that, anything but. It's just not that complicated when you dive into it and you fully understand it. So we just got that 40-50 target there. So when we go ahead and talk about something 24 hours in advance, and then as price is dropping about somewhere down in here, they're talking about how, why rather the market is dropping, so on and so forth, as I was saying. And then the crazy part about it is we're already looking to buy the market. I again talked about this yesterday. So then we get down here, and they're still talking about the negativity, how it's going to drive, how we should be down, we're probably going to have a huge down day, etc. Well, then it starts to pause, right? And then it starts to actually bounce a little bit, up through this area. All of a sudden, as price starts to rally a little bit, whole mood changes. The whole mood changes, right? So as price starts to rally back up, they then start talking about the reason that price isn't dropping more. And it's great to hear because there's so much that, it's very informative, right, in some ways, but not useful at all for trading purposes. And that's what we always try to drive home, is that we don't want to listen to the news, because all that's going to do is, number one, cause emotions, but it's really lagging information. Thank goodness for the commentators. They are amazing, right? They really are. But that is their job, to commentate, right? Not to predetermine and so on and so forth. they have a lot of people like on CNBC who come in and attempt to call tops and bottoms, or just in general all over the board analysis, and they're amazing, very good at their jobs. I just think it's humorous that in these situations, you want to be ahead of the curve, so to speak, not behind it. Okay. So anyway, that's the reason we were looking this morning at actually buying the market when it was declining. So we're just always trying to give a great mindset, a simple mindset, if you will. And what we left with yesterday, members, you'll remember this, what we talked about is this area here. So I drew that in down on a 3-minute chart, I think it was. And then I said very specifically, we don't try to, I said that's why we don't try to, predict which level it's going to turn and so on and so forth, that we didn't need to do that. What we needed to do was wait for it to arrive there and print the demand, okay, and then I can start buying the demand in on the move up, right? So that's basically what I did this morning, all right? Because obviously none of this existed, until this morning. So anyway, that's the if then else kind of thought process that we use, and just try to wrap our minds around how crazy the market can be, but yet in a general sense how very straightforward it is. Like for example, a lot of today, a lot of the institutions, how do you think this market is being driven back up? Is obviously a lot of willing buyers down there, and so it's typical that it would be the institutions, or not this short term, I would say could be like pension fund managers and things like that, but that's usually with hedge funds, right? A lot of pension funds put their money with hedge funds and things like that. So you have a lot of that, and you could definitely see some hedge funds and things like that doing the buying here, driving price back up. But typically they're buying from the retail side of things, right? And that's why it's so very unfortunate. And there are more, obviously far more retail traders than there are, institutions and hedge funds and so on and so forth. But those institutions or hedge funds, et cetera, are the ones who hold the bulk of the funds, right? So even though there's far fewer of them, they, clearly have much more of an impact on the market. Okay, so anyway, just wanted to throw all of that out there. Hopefully everything I've said thus far makes sense. Not really here to discuss all of that. I just figured it was an interesting time in the market to do that, and so I figured I would go ahead and get that out of the way. Let's talk about the software, though. That's what we're here to do. And I hope all of you were watching closely this morning and you didn't get terrified. So just remember, as I said, and I always do pretty much every day we're in the room, pay attention to this, okay? Because all of this over here, it's just going to manipulate you. It's going to create emotions, and they're so unnecessary. If we can find a way, find it on ourselves, to not remove our emotions, that would make us, well, I don't mean this to be a literal kind of thing, but by definition, it's a psychopath, right? And none of us are that. So we want the emotion. We want to have emotion. But if we can find it in ourselves to control it, that being objective, having a rule set, being able to predetermine something in advance and following through with that is, in my opinion, that's one of the keys, if not the key really, to trading, right? So the reason that the software, one of the reasons that we developed this particular thing, as well as all of it, so pretty much every component, comes from the simple fact that we need it. Not a single thing has come from something that we don't or didn't need, right, or want for further analysis purposes. So we don't just go throw bells and whistles in the software for no reason. We do it because it's informative and it gives us, or at least we think it gives us, some edge in the market. And ultimately, if we think that it does, then it kind of does, doesn't it? It's, what is that, the placebo effect, All right, so efficiency is very, very key. I'll show you how I entered this position this morning, and then I'll show you how, if you look down at the bottom of the screen right here, You can see where it says the live orders will be submitted on the appearance of an RBR, and obviously it's letting me know not to reload the chart, okay? Because when you reload the chart, it recalculates, and therefore I would just have to go resubmit this order, right? Okay, so what I'm specifying right now is that I want to take an RBR, right? So I know that multiple ways, but if I look down here at the bottom of the chart here, it's specifying my entry type, but I could just go up here and I can see that I have my entry type of RBRs, which is turned on. I can then see my my label in and of itself. And if you were there yesterday in the session, do you remember how I told you you'd see the orders snapping back and things like that? Because the market's open now. So you're going to see, that's what you'll see today. When the market is closed, there is no data, and data is required to trigger calculations in the market, okay, based on, or at least in NinjaScript and so on. Okay, excuse me. So let me get through a couple of questions really quick, and then I just don't want to leave these too far behind. But generally, what I'll do is towards the end of the session, I'll do as much Q&A as you guys and gals want to do. Okay. So I'll say you're saying I am a new monthly member. Is what I okay? I got you. What you could afford, yeah, absolutely. And plan to use the micro S&P contracts. Yep, absolutely. Live and learn. Thank you, Will, for all you do. Oh, man, no, of course. Yeah, no, of course. That was really nice of you to say, by the way. Thank you for all that you do, right? Because at the end of the day, as I've said before, I think I said it yesterday, I don't talk about this too often, but look, at the end of the day, you helping yourself, and then if I'm able to actually help you, I mean, it's kind of selfish, but it makes me feel better about me, It just, so I appreciate everything you're saying there, and I'll continue to do everything I can for you. Okay, what indicator draws your green boxes? Is it drawn based on order flow? So this is our software, right? Everything that you'll see on the, we don't use, let me backtrack, I apologize. We do use draw objects. So what you'd see on the chart right now, every single thing that you see except for that trending channel right there is a derivative of the PFAZoneSuite, right? So this is its menu up here, and you're talking about the zones, so I can just kind of do that right there. That's our software auto-populating. These are our supply and demand zones that are being derived from that. And then there, boatloads of tools that we have built in, but we just don't have them turned on right now, right? So we have automated trend lines, trend ID, which basically is a collaboration of moving average kind of crossover ordeal where it helps us to define the direction of the market. So what that would then, what that would do is paint the bar colors, either whatever we have specified in the settings, like I think, pretty sure I have it set to red and green. So in an uptrend, they'd be painted green, downtrend red, things like that. Bunch of tons and tons of tools here. Market structure, I mean, just power zone, draw tools, trade data box, a lot of things. I don't want to go into every single one of those. In fact, I don't want to start there today. I want to focus on the order management. And then as we go continuously through our software training, you'll learn every single component and how it all functions. And trust me when I tell you, it is a lot. There is a lot. Suffice to say, we had to create our own custom user interface because it was just too much for a standard platform to handle, right? And I don't mean that in I'm not trying to toot a horn there. I just mean it literally, and I'll show you why. So if you open this up, there's just so much built into it. There's too many settings for it to handle, right? So I mean, every single one of these, it goes through, you can see alerts. I mean, every one of them has tons and tons and tons. So there's just so many settings. And we also do different things, like we had to develop our own templates. We don't use Ninja templates. We had to develop our own, and just a lot of stuff that kind of goes into the depth of the software, I suppose. But let me rather stay focused today, because I will deviate, and I don't mean to do that, but I know myself and I will. And I want to focus directly on the order management in and of itself, because that's our latest bell and whistle, and it is very, very, boy, I'm loving it, let me tell you. I'm absolutely loving it, but let's learn why I'm loving it. So the things that we do are based on location. Let's first and foremost kind of put that out there, right? David, by the way, so that I hope that answers your question, right? The indicator, it's technically in the indicator list, but it's, I couldn't count. It's a whole suite of things on the chart. So it's called the PFAZoneSuite. All right. So everything we do is location based. Number one. That's important because, well, no. That's not even fair. It's not important. It's everything, right? I mean, important doesn't even emphasize what I'm trying to say here. The location is the most critical part of everything we do, and that goes in part with like reading the market, right? So, for example, today when I come into the market, I want to know, should I be buying, should I be selling, should I be doing both, or neither? And every single one of those, the answer is derived from the question, where are we? Where are we in the location, right? In other words, what is our location today? And remember, I'm just going to use I always like to use real examples because it's just, I always like to use what we've actually discussed and not some hindsight, nonsense. So we'll just use this from today, the one that you just saw, right? We could go back, by the way. We took a 4-hour short yesterday. Actually, we took 2 shorts yesterday. My bad. In the live session, we hit. No, I'm sorry. I pointed this 3-minute one out. I didn't actually execute it because my chart froze up. I forgot about that. But you all got to see that, or the members did. And then we executed a 4-hour short setup right up and through here, and so on and so forth. Anyway. Point being is it was location based. So yesterday we were looking at selling. Then we talk about, hey, if it gets here, this is where we want to become the buyer, right? So again, location. I promise this will make sense in just a little bit if you just bear with me. I realize how difficult that can be to just listen to someone talk, especially myself, I guess. But I'll do my best, okay? So as it is location based, I know when and where, more importantly the where of how I want to buy the market or sell the market. So again, as I'm using this as the example, I'd kind of get rid of that, I think. Or better yet, let's do this, because I don't want the lines on my chart. I'd rather do this. Okay, and that's what you're seeing up here, by the way. Those are the trades from yesterday. So then I'll just go in and remove the lines. And then this is the one from this morning that you saw. So I'm just basically marking those areas that we previously discussed on the chart, and then I'll go back and delete them after we've recapped and discussed them and so on. So again, we were looking at this general area to get to, and we say, okay, we don't need to predict where price is going to turn. We can go down and wait for the demand to form on that smaller time frame and start buying the demand, right? And so how do I go into a scenario like that, though? Like, how do I know, how can I place an order, So let me break this down. So if I already know that right now, let's say 2 hours ago, or even yesterday, but ultimately I already knew that down in this area, which if you turn on the zone here, you'll see where I got that from. Okay, so there's the zone. And basically I just went in and adjusted it to make it a little bit larger from yesterday. So that's what you're seeing right there. But ultimately there is the demand zone. Now if you watch out from below, by the way, just a little tidbit for future reference, right around that 39.91 half, it's going to be just above that if we draw it to its entirety. I don't want to talk about too much of this right now. Okay, but let's just call it a 4,000 mark. Right around that 4,000 mark, there's a pretty substantial demand level right down there, and essentially I would combine these two. So if we get down there today, we're most likely going to have a bounce from this level here. Anyway, so we'll come back to that later. How do I do this if in advance? So what I don't want to do is go down and try to predict which of these levels, because there can be a bunch, right? I mean, most of them are not usable anyway. We talked about this yesterday. You can see the difference in color, right? Well, that right there is it's the same color, but it's a lighter shade, and what that means is the level has already been tested. I'm sorry to hear that, Rail. I hope that it works out a little bit better for you. No one has mentioned any issues. I think that would probably be maybe an internet speed on your end or something. I don't think anyone's having any issues with buffering. But the recording will be available too, and so we'll make sure you get that. And hopefully that will be a little bit more speedy for you. But anyway, you're seeing the same color, right? Green and green. But one is obviously a different shade, if you will, but really all it is opacity. And what it means is this level has already been tested, right? So as you can see, the level forms, we come back to retest it, and then what a huge rally, away from that, all right? But again, I don't want to go down and try to predict all of this and be like, you know what, it's absolutely going to turn complete reversal in this level, because I mean, that's a difficult thing to do, because to take this morning, for example, that was just what I call a knee-jerk reaction, okay? And it was a very strong and abrupt drop. So you want to be very careful with just always thinking that we can go down and predict exactly where price is going to turn. And please understand, this is a 3-minute chart. It's very small. So again, smaller time frame, more difficult. But I want to be careful doing that. So even this level down here, I'm already saying, hey, I anticipate there's going to be a bounce. I could mitigate that, we'll come back, as I said, to that. But I'm still not going down there and placing a blind order because of the condition of the market. I need to, fully be aware of that. But what I can do is wait for price to tell me, okay? So you can see now it's testing our demand zone there at 40.40, 40.32, where my anticipation for that to go would be, maybe it goes all the way back up, but my anticipation is right there. I'm sorry, hold on. Let me do this in real time as it's happening. Right there, that hash line right there. Because what you're doing is you just formed a bit of sellers, right? So there's a bit of sellers here, but I will not know and be able to quantify those, as all you members know, for a little bit of time. And we're bouncing up out of this demand. But the reason I say I don't expect much out of this demand is because we should have been buying at the bottom, not up here. All right? So I don't want to get now 50% of the way back up and start, oh, okay, now it's time for me to buy. No. No, either we do it in the right location or we sit back and we don't really need to do it at all. Okay? All right, so again, if I focus in on how I can do that, what I did this morning, I'm going to take and walk you back through what I did this morning, and so you'll see what the benefit of the software, at least this particular bell and whistle, I suppose we could call, feature, that's a better way of saying it. So I go in here and there's multiple ways I can buy. We have, as we, I believe, discussed yesterday, RBRs and DVDs. Those are these hash marks, as you'll see. So there's your green marks, things like that. There's one up here that never got tested, and that's your red one, right? So they're different colors. Red is the DVDs, greens are the RBRs, right? And so that's one option we can use for entering and exiting the market. That would be, we would consider that to be an RBR entry, and in which case if it touches the line, that gives us the entry and stops above or below the structure, so on and so forth. Another way to do it is by using the zones in themselves. So we're not all over the board. There's literally just two ways to go about doing this. It's either buying, like we said, the RBRs and DVDs, or it is buying the supply and the demand zones. Either way, that's all built in right here. So this morning I come in and I say, okay, on the decline, right, so let's go back like this. On the decline, I know that I wanted to be the buyer. I already knew that, okay? But the question is, how do I stop it from doing anything and making my own further requirements come into play? So then I go here and I can use either tool I want. So I'm going to put on a buy entry, okay? And now we have what's called the entry zone. So the entry zone, again, I'm so very excited about this, and I won't even begin to probably touch on how impactful it is today. But if you can think of questions, feel free to ask. That way, I may figure out a different way or something else that it's beneficial for. Okay, so if I turn on the entry zone, you can now see how things updated, instantaneously, right? So here's my entry zone right here. And what's happening is essentially it is taking either my maximum risk. By the way, that I have that set to 1,000 ticks. You can see RR right here. That stands for risk and reward, okay? You can see how that demand zone worked out, got us right back to that really easy and so on. So anyway, we have the RR. That's only 195 ticks, right? So you can see the same thing down here. If we go up, you'll see there's what we call the trigger line. That's at 390 ticks. Notice that's a positive number because it's in profit, not at risk. And then up above 780 on the target, and also obviously a positive number. So I need to specify when and where, because we are using time-based charts, I can also specify the when, how I want to go about doing this. Because if I did this right now and I went and submitted that order, well, I'm going to, or rather the software is going to intuitively submit underneath the hood a stop order, right? So it's not touching the label. So if I went and did this, sorry, it's basically good snapping back. See? So if I went and did this, notice no order, there's not an order getting filled, okay? And the reason for that is because it intuitively understands that price is above, that the label is above current price, just the same as any stop order would work, right? So I can take this and I say, hold on a minute, there's no way I want to enter way up here. What I want to do is enter way down here, okay? So now I've taken my requirement of the location. Remember how I told you location, location, location is everything. And I'm saying now, okay, great, I want to enter somewhere in this location, but don't enter if price is beyond, right? So for all intents and purposes right now, if I were to go to real time, I'm trying to think of the best, let me show you how I did it this morning, and then we'll actually go do one real quick in real time, all right? So right here, I basically took it like that, and I haven't gotten to this other feature that I wanted to talk about yet, but now is a good time to do that. So right here, when I enable the entry zone, notice how now something else pops up. It's called Adapt Zone. And what that means is I know that I want to be a buyer down here, but what if price keeps dropping? Okay? The zone will adapt to each new low that is formed until my maximum risk is reached. So if I specify in the settings, because we can, all of this is in the settings, everything we talk about, we can specify our own maximum risk. So let's say hypothetically that in my trading, I specified 100 ticks as my max risk. Okay, what would happen is price would start to drop, and as it gets here, okay, I've arrived at my location, but let's see, say that price continues to drop beyond the low of this particular zone here. If I am telling it to adapt, in other words, this is on, now the zone starts to move, right? It continuously adapts to the lower lows and lower lows and lower lows. The benefit of that is I've specified at least go down this far or further, right? So if you think about the entry zone, you could think about it as kind of like a limit order of sorts, right? Go to this location or better. Now, I want to be clear because maybe that's not something that I would want to do. Maybe I don't want to go down. Maybe I only want to enter in this location and this location alone, right? If that's the case, and I can put that wherever I want, if that's the case, I simply just go turn off the adapting of the zone. So in said case, it's not going to do anything. It's just going to sit there. And if my entry takes place inside of that zone, great. If it doesn't, in other words, if price were to keep dropping, okay, and maybe it drops down something like this, it's not going to take the entry, right, because it's not inside of my area. So again, if I want it to keep going to the downside, all I need to do is go in and turn on adapt. So let's go do one in real time. That's what I did this morning, and I submitted my entry, of course, and it was inside of my defined location. I then got the print of the demand zone, just like that. When it touched my label, I was long the market officially, as you all saw, right? You saw the trade from this morning, okay? And that's how that happened. So right now, let's say, actually, this is perfect timing. Okay, I'm going to get rid of this because we've already talked about it. And here's what I'm going to do. So we're going to go try to execute this RBR on a long, right? We're going to go try to take a long. But I already need to define, in my head I've already done it, but I need to be efficient. Because right now I'm thinking, you know what? Again, this is complete hypothetical at this point. I just need to show you the function of it. I really want to be a buyer here, but I'm willing to buy another RBR if it drops down anywhere, let's say, to this structure here, just below this, right? Maybe another RBR populates, and I would take that one too if this one doesn't get executed. So I'm building the location, right? So now I'm going to go up here, and I'm going to switch my entry type to the RBR, and as you noticed, it specifies it right there, 40, 53 half. It populated right on the RBR. But I've done nothing with my stop or anything, right? So right now, it's just basically sitting at my max risk. It's just going to sit there. I mean, I could move it. I could adapt it, right, if I want to do something like that. And I could turn that and disable the snap mode and so on and so forth. But suffice to say, that's where it's just kind of sitting there, right? Now, that's not what I wanted. I need to specify this, because imagine this to be an hourly chart or a 4-hour chart or even a daily chart. I don't know, 15 minutes, whatever time frame, but the bigger time frame. Now imagine that I want to walk away. I need to go to lunch. My buddy contacted me, said, hey, let's go to lunch. I said, okay. How do I control what's going to happen when I'm not here? Because if I just tell it to take an RBR, it's just going to, I mean, I can't require a location. So now I go here and I enable my entry zone. Well, now you note that my stop has indeed populated on my zone in and of itself. So the entry has stayed where it is because it's on the RBR. I'm going to take and require, okay, here's what I'm going to do. I'm going to take and require that an RBR get filled inside of this location. And if it doesn't, c'est la vie. Remember, I'm out to lunch with my buddy. I could care less at this point. After I submit this order, I've told it I need you to enter, but only I need you to enter here, right? And if you go beyond this, c'est la vie. Now, in addition to that, note that the RBR is not inside of that. So right now, I'm setting myself up to miss that entry, you see? So I need to go ahead and set myself up in a way that I can execute this RBR or a lower one. So in which case, I need to do something like this. I need to consume that area, right? Now, it is inside of my my rectangle, of course, my entry zone. All right, so I haven't completed the process yet. Now I'm thinking to myself, well, what if price goes lower today? Am I still in the right location that I want to be the buyer? In other words, do I want to keep looking for my entry signals? Please remember, location, location, location. So just like I did this morning, I'm looking for the location first, then the execution, right? So as long as I'm in the proper location, I may want to do that. All I have to do is make sure my adapt zone is on. So what's going to happen right here and right now, well, we'll see, right? So it may execute this one. I don't know. If it touches it, it will. Conversely, it may not, and then we're going to start dropping again. Well, what it's doing underneath the hood is saying, well, okay, but you told me to continue, you told me you wanted to take an RBR, and you told me that you're willing to take it even lower. And how did I do that? Because I went up and I want my zone to adapt, right? So my zone is not going to adapt higher. Why? Because buy low, sell high. We don't want to buy above. That would, remember, think of it like a limit order, okay? So it has to be here or lower, and it only goes lower than what it is right now if I have the adapt zone enabled, okay? So right now, if let's give some hypotheticals. Let's say that price does not go trigger that order and it starts to break down. Let's just say that it breaks down like this. What's going to happen is the zone is going to start to adapt, right? A lower low, a lower low, a lower low, a lower low, so on and so forth. So this becomes my area, my tradable area, if you will. And then when it meets my maximum risk tolerance, it's going to start dragging that entry down. Because it's all about the stop. Everything we do has to be about the stop, because where we enter is great and we want to be extremely refined with that, but more important is where we're wrong. Because if I don't have my stop right, I could enter anywhere in here. But if the stop, again, if the stop is not in the right place, I could easily get taken out of the position and then it go exactly where I thought it was going to go anyway. So it's okay to go lower in a buy setup. It's not okay to go higher. Conversely, if I were selling, it would be the opposite, right? It's okay to go higher, but not lower. Again, just like limit orders. So we'll see how this pans out. Let's go ahead and bring this back up here, and I'm just going to adjust it to that area. Right now what I'm saying is this is the area that I want to be, super focused on. But because of the larger time frame and everything that I already know about the market, if it drops more, that's just going to give me a better entry. Okay? So maybe the market does go down and then gives me a lower RBR, something like that. Absolutely I want to execute. I don't want to miss that trade if I'm at lunch or if I'm doing anything else. I certainly don't want to miss it. In fact, it's just giving me a better entry, right? Okay, so just kind of waiting for this. Let's see what happens here. Now, if I want to go ahead and map out this trade for all intensive purposes, right? Of course, one can do that. I'll be able to move this as soon as the order is triggered there. And this is a trigger line. So basically what that says is, when do you want me to move the stop to break even plus commissions? So whenever this line gets touched, that's what's going to happen. The stop is then going to automatically move to break even plus commissions, and that'll become a protected trade. Kind of like what you saw when you first came in here this morning. The stop had been moved to break even plus commissions because it hit the trigger line. And then above, oh, I'm sorry guys and gals, I forgot to stinker. All right, actually, you know what? Let me just put it in a buy real quick. Okay. All right, that's my fault, actually. There we go. So I just went ahead and dragged it down because it had already met the entry, so that was my bad. I forgot to manage the situation. Anyway, all right, so now I can start to manage it, move these. If I want it to snap back, I can do that. So right now I'm saying, look, put my trigger line, wherever I need that to be, okay? And if it's touched, move this stop up to break even plus commissions and do that instantly, okay? My target is way up here, which I could, again, I can place this anywhere I want. I'm not even going to pretend that this is a real trade or anything like that, because I would definitely never take this. Just to be abundantly clear, I said this from the beginning, actually, that if I didn't buy down here, I would not want to be the buyer up here after 50%, right? But I need to show you the functionality here so that you can kind of see what it's doing. I'm requiring a location. If we're inside of that location, great. If not, then c'est la vie, and I go on about my day. All right, let me see. Give me just 1 second. I'm trying to go through the SEO question. I'm really loving this new entry zone feature. Thank you, thank you, thank you. Me too. Great stuff. I was wondering if there's an option to place an order at a new form demand zone down in the entry zone, or is it only already? Yeah, no, that's what you. Yeah, absolutely. You could just use the buy. It just use the buy sell, right? Yeah. You would just put that in the demand zone, or supply, of course. Okay. So let's just let me do. I'm going to remember I told you we wouldn't want to reload the chart. You see how the labels disappeared and so on. Okay, so I want to be mindful of that. If I were in a real trade, I would never have done that. but I want to get out the features and functionality. Let's go look at something on a little bit of a bigger time frame, actually, but to show you other functionality when it comes to the order management. What if I just made a big mistake? And it's kind of like an oops moment, if you will. Well, I got my order filled and all of that, but I reloaded the chart, or I lost internet connection, or I lost power, things like that. So I need to get connected. So then we have all the features built in for me to handle those situations. So I'm going to go turn the OCO off. That's the OCO's order cancels orders, and that's, in other words, the bracket order. And if I'm in a buy position and I want to close that out, I can do that at any time, right? Just by applying a single order on the chart. Then I just go submit that. If I touch it, that will become my target, right? And I could also, if it's on the other side, so if I did this, okay, and it's down here and submit it, well, now it's acting as a stop, right? So it's intuitively reading which side of the market it's on, and therefore acting as a limit or a stop order of sorts. All right, so we'll see how this works here in just a moment. See if we can get out of this. I'll just let that one go. I'm going to go over here and I'll explain this, okay? Because I told you I had already executed this from this morning. Well, let's look at what's actually happening here, though. So in this case, I submitted an RBR entry. Actually, you can read this down here. I think we talked about this earlier. And I said, you know what? I want to take an RBR. I really do, on this particular time frame, which is that 60-minute chart. However, I need it to be down here or lower. It's got to be in the right location. If it's not in my specified correct location, I'm just not willing to buy it. It's too high, right? So then that Ford F-150 is no longer 40 grand. They said, oh, you know what? I just got an email. I actually don't have to go out of the country or whatever for a family matter. I realize we already, struck a bargain or whatever, but I'm going to have to ask 70 for it instead, right? So that was the order getting filled over there, that target. Okay, but anyway, using that joke and all of that stuff, it's just not something that I'd be willing to do. What would I tell that person? I would say, or the dealer or whatever, I would say, no, you told me that, in other words, we made an agreement, obviously maybe contract or something like that, at $40,000, that's what I'm going to pay for it. So I'm dictating price value the same way I would do in any other aspect, right? And that's what this is doing here for me. It's just dictating the location. If it doesn't happen where I've required it, then move on. So I went here, I submitted an RBR, or rather I enabled an RBR, turned my RBR entry on. I made sure that the entry zone was on, and I've specified the location. I then went and submitted the order. Now if you notice, the RBR, the label is way up here on the RBR because that's the only one that we have right now. But what's going to happen if we get another RBR that forms down here lower? It's now time for me to go to lunch, right? So this is what I'm talking about. This is where I say, you know what? Oh my goodness, I don't want to sit here all day. And what it's doing right now, I'm not willing to buy it anymore, okay? But I'm still willing to take a shot at it today. I'm giving you hypotheticals here. I'm still willing to take a shot at it, but if I do that, that means I'm going to have to sit here and stare at the screen all day. Just waiting and waiting and waiting. Can't go to lunch. My buddy calls. I said, no, I can't go to lunch because I have to sit here and stare at a computer monitor. That's boring. Emotional too. But anyway, the point is, it's efficiency, and that allows me to do things as in the example, go out to lunch and not have to worry about where I'm going to get my order executed. Okay? All right. And let's see. Why don't I take a moment and address some questions if you all have them? I'm happy to answer any questions that you have. If there's other features or functionality that you want to discuss in the software, do let me know. I'm trying to think if I really missed anything here. You also have up and down bars, right? So on the close of a bar, if it's up, execute that trade. If it's a down bar, execute a short on the close of a down bar. So just different order types, right? But it's all going to be consumed by this. So in other words, if I go here and I submit a buy order or an up bar, any of them, it doesn't matter. It's just a different execution method. But it still needs to take place in the proper location. All right. What I could do at any time is make changes, right? I could do this. So if I'm feeling, yeah, you know what, I don't want to enter that high today. Again, I gave it a shot, but now that's just too high. I'm going to move it down. Okay. So now I could require that we make a lower low, right? In fact, why don't I just do this? And I say, you know what? Nope, not today. I already missed, or actually already took that trade, so to speak. So I don't want to go at it again. I definitely want to take another long opportunity, but I don't want to do it until we get down here now, right? So maybe I do it inside of this area. Well, now I'm saying, give me a better entry, okay? So it's time to go to lunch. I'm only going to be taking a long position if we arrive at the approximate 39.80 or lower inside of this area up to my maximum risk tolerance, and the zone is going to adapt unless I disable this. Okay? All right. So you can see how this is, as I said before, location-based. It really helps me to be able to walk away from the screen so much. Control those emotions. All right. So like I said, I'm gonna go through. I'll address some questions if you want to talk about other features and functionality or use cases. We can also look at some analysis and things like that, but I don't want to focus too much on that today as we've been here for nearly an hour, and I want to respect everyone's time. But let's get into it. Fantastic software, Will. Thank you so much. I really appreciate that, Bob. That means a lot. It really does. It really does. Let's see. Do you feel a 3-minute RBR down in that 60-minute zone is still valid, or would you wait for a lower low, or excuse me, would you wait for a lower lows, or wait for lower lows, as is just what I'm going to say, before looking for new longs? I bought at 40.14 quarter. Where's 40.14 quarter? Let's go to the 3-minute chart. Okay. Yeah, you bought it right around the same area I did. Yeah, apparently you're paying attention. I bought at that level, but I'm already out, so looking to reload in case we test the highs from yesterday. In case we test the highs, looking to reload in case we test the highs from yesterday. Okay, yeah, I think I understand what you're saying. So that if we scrunch up the chart, the highs from yesterday being way up here, right? Okay, so I guess I would just have to ask you the question, why'd you exit in the first place, Like if you're willing to take, think about it this way, if you're willing to take a second and or a third or whatever setup to get up here, why not just hold on to the one best trade you're ever going to get? You know what I mean? So I would say no, I wouldn't continuously be looking for demand. Well, I think I said that a minute ago, actually. And although I expect our levels to work well, that doesn't mean that I'm going to take the trade, right? So what I said a little bit ago was there were a little bit of sellers right in through here, et cetera, you remember, okay? And then, so I said I wouldn't be up here taking this trade because we've already, rallied up about 50% of the decline. At that time, it was about 50%, you see. And so, no, I wouldn't be doing that just because we've already moved up so far. So as we decline, again, I'll be looking for a lower low, and then I could potentially revisit that. But as you know, to be very clear, I'm not a scalper, right? So I'm not very clearly stating this. I am not going to go over here and personally trade, scalp trades. It's just not. It's not in me. I don't want to do it. We do it in the live room, and actually, you saw one this morning. I mean, that's not I guess you wouldn't really, you'd probably consider that a day trade, maybe not a scalp. Suffice to say it's very small, right? But as you know, I look for the bigger moves in the market, not the smaller ones, okay? So I'm going to be a little bit more patient now, and I'm going to wait on a bigger time frame. If I am to enter again, well, for me, it would be, let's say, the first entry, but I would be doing it from here, okay, not so much over here. So I know you and I have talked about this many, many times about that scalping mentality, right? I'm not trying to speak ill of it. I'm just telling you factually, for me, it is not as advantageous. And so therefore, I certainly would be remiss if I didn't tell you all that. I don't want to, be deceitful in any way. That is not what I do. I don't do it because it doesn't work as well for me. So anyway, to answer your question, I'm not looking over here. I'm looking over here, right? I want to see a bigger time frame set up so that I can have a bigger potential move in the market. I hope that makes sense. Soon. I can't give you an exact on the download, but very, very soon. Probably a few days or something like that. Okay. So you all tell me what you'd like for me to do, and I'll be happy to do it. Again, if you want to go through use cases or whatever, I'd be happy to do that as well. If you guys want to look at other markets, remember, I can go through really quick and do some recaps of the things that we've talked about across all these markets. These are the markets that we've looked at over the past, few months. I'd be happy to recap it, but I mean, I don't know that there's much need in that. I have a funded account, okay, and I'm forced to take day trades. Yeah, I understand that. I do. But so I understand that, right? But what I guess still, though, that doesn't answer the question of why are you continuously trying to do this when you could just hold on to what was the best, And that's what I'm trying to get at. So I understand that this is the problem with the whole scalping thing, right? Because your mentality, or in this case, it's not your mentality so much. You're saying it's because of you having proprietary funding or whatever. I get that, but we're not even halfway through the day yet. So, why not just hang in there? If you're looking or willing rather to continuously buy after this big move up, inside of the day intraday trend, why not just hold it from the bottom anyway? Because here's the problem with that, all right? And this is a big problem. It's a huge one, actually. Well, that sounded like, was it that Pretty Woman movie back in, goodness gracious, date myself. What did she say? Something big and then huge. Big problem. Huge. So I don't know. Anyway. I'm sure some of you caught that reference, but so in this situation, remember earlier we talked about like stop placement, and I said that is, in my opinion, probably the most important thing about the entry. I mean, about the whole like execution. So the location is in general the most important thing, and reading the market and so on. But then you come into the execution component. Okay, meaning where's my entry, stop, target's going to be, and so on. The problem with doing it like that, meaning, re-entering inside of a trend, is because it is very, very common for it to dip below a level and then go in the same direction. What is proof that I am wrong is if it takes out the literal bottom. This doesn't prove anything to me. If it breaks below that level right there, so what? What did you just prove? You took out a level inside of a trend. That doesn't tell me anything, right? I mean, it's just really not much of anything. So I would much rather just hold the position from the very beginning until my final destination, and or utilize maybe more of a trailing method as opposed to what you're doing or the question that you're asking about continuing to enter yet again and again, right? Very, very problematic in my opinion. for that reason. Okay, only because inside of a trend we get whipped around a lot more. The exterior or the extremity, that is where I want to be entering, always if I can. And that's why we put our stops above and below the structures like that, because that is the extremity. That's the one thing that can prove to me I'm right or wrong, right? Think about the beginning of a trend or the end of a trend. Those are the extremities. If I can enter at the beginning, think about this. Let me actually give you an example, or real examples from what we discussed yesterday. So remember, we were shorting the market here, right? Look at where I'm shorting the market. And then so what we actually, this is where we discussed shorting the market on that little DVD right there. But where I actually entered the market yesterday was on a 4-hour DVD, which is like right up here. Okay. Well, and then I went on further. It's reached the location, so it's a done deal now. No matter what, that 4-hour short from yesterday, it's done. As I told you from yesterday, that was a counter trend trade anyway. It would be short-lived, right? Or Travis, I'm not speaking to you now directly, by the way. I'm just kind of recapping and so on. It's hard for me to differentiate the live room from people who are not in it every day and so on. So I'm trying my best. The point that I'm trying to make to you, though, is we took a short position. It doesn't matter. You could have said from the 3-minute, which is here, or from that 4-hour setup, which we actually took from yesterday, which was right up approximately here. Okay. When we get that, look at where I'm shorting from. It never, ever, ever is going to be any better than that, right? Because I'm short from the literal top, the extremity. Think about what I did down here. It was on a smaller time frame, sure. Well, not if, so on a 3-minute, it would have been the same thing. We were shorting here, today buying down here, right? So I'm selling after moves up because I want to catch the extremity. I'm buying after moves down because I want to catch that extremity. I want that to prove me wrong and break it completely, or just rock and roll and give me some big, move in the market. And that means relatable to the corresponding time frame. So on a 3-minute chart, that what you saw this morning, that was a big move, right? I mean, it's a 3-minute chart, so don't expect the moon or anything. But it was an entry right down here, and then basically I just went right over here and looked all the way up there for a profit target. So that was what, 4-to-1, something like that, maybe. So that would be, pretty big for a 3-minute chart. But then the same thing becomes applicable if I go up in time frame. If I go up to a 60 or 4-hour or a daily, the larger the potential reward becomes. Also, the larger the risk, but the risk reward remains intact. 2-to-1, 3-to-1, 10-to-1. Something like that. What I don't want to do is go get emotional, exit my trade because of whatever reason, and then, man, I shouldn't have done that. I should have stayed in that. That's where the emotions, boy, they'll chew you alive. So no, I wouldn't be exiting if I'm trying to capitalize on bigger moves in the market. Yeah, great question. Really great question. As far as your day trade stuff goes, though, the requirements, I mean, I do understand that. It doesn't change the fact, I still wouldn't go in and continuously try to re-enter that. No, I would be done with that. So watch what happens right here. Let me show you, okay? Right here, ironically, you're probably about to break. I will tell you, you're probably, let me say probably, but if you break this, in other words, if you touch 40, 42 quarter, okay, you're most likely going to go into this level below this structure low and take it out. That's what this is doing, consuming this, right? So if we break down and touch that 40, 42 quarter, I already and immediately have the expectation that we're going to go at minimum to 40.39 and or lower, and most likely lower. Okay, think about what the chart is showing you right now. If I wanted to be the seller, if I were in the proper location, let's say, I would be hitting the sell button right now. Like literally right now in fact, I'd already have hit it. But I could hit it right now too, because what I would then be doing is on a smaller time frame, there's my extremity. Right? I'm just doing the opposite. Down here, I was buying off of an extremity. Up here, I would be selling off of an extremity. Okay? But the only way that I would do either of those is of course, if I'm in the proper location. Hey, let's do this. Let me reset things. I don't know what changes I did or didn't make. So this is really now on the sell side of the market, right? So let's say anywhere. All right. Let me go over here and grab some questions real quick. Let's see. Going back to my earlier question. So if you placed an entry zone box, so the entry zone, if you place one from 4020 to 4,000, okay, I gotcha. Well, basically that would be okay. So if that's what you said, right? 4020 to 4. Okay, yeah. So if I did that this morning and used the buy entry instead of RBR entry, then would the software have placed the buy entry at 40? It would place it wherever you put it, right? So no, it would place it at 4020 because that's where you that's where you told it to, right? So yeah, let me do this. I'll come back and resubmit that order. It's no problem. If I wanted to be the buyer, okay, let's say today, and I wanted to, or actually this morning, like what your question is iterating there, a couple of things it's iterating through. So if you said, look, I want to be the buyer for all intensive purposes, and I want to do it down here from 4020, okay, I'll try to get that perfect in a moment, but I don't really care so much right now. Okay, so if I said that I want to do that, well, my buy entry is at 4020, technically 4020 quarter, but I think you understand where I'm going with that. When the demand zone was formed. Yeah, so no, it would not go above this. So what would then happen if the demand zone was formed, right, is you would never have gotten the entry. Well, actually you would have because it pulls back. So yeah, but no, it would have entered at 4020 because that's the top of your zone. Now, if, however, I didn't want to enter at 4020 and per your question, maybe wanted to enter at 4014, I would not want to have my, I wouldn't want to do that. I'd want to do it like this. Put that thing at 4014. Again, I can open this up if you want me to get it exact, but I think you see what I'm doing here, right? Just do that. And then, absolutely, it would have been filled at 4014 on the retest, and then my stop would be at 4,000. If I want that to be different, I mean, so let's say that I wanted to be the buyer at 4014 quarter or lower, okay? What I could have done is initially, maybe it had dropped down to about that point or whatever. Remember, all I now have to do is go turn on my adapt zone. You see what it just did? You see it just adapted it immediately, right? Because it sees that price is already down there. But what would have happened this morning is 4014 quarter would not have changed, but the low of it would have adapted because it made a lower low here. So now my entry becomes 4014 quarter, my stop is 4006 half, and it's well within my maximum risk tolerance. Otherwise, it would not have placed the trade. But it did. Yeah, so that's how that would have worked. Really good question, by the way. 100% got you on that. Okay, good. You said you agree, and then 100% you got. Oh, that was from your earlier question. Got it. Okay, very good. On the trade you took short yesterday, does your red box show up before that swing high or after the swing high? What time frame, David? Because because there's a bunch of them, right? on the 60-minute. I don't remember exactly when it displayed. It would have, I mean, it would have displayed, you know, most likely, you know, right on this bar. So it would have been there. But remember, this didn't, so the reason it's bright red is because it didn't quite get tested. You see how it came close to it? Yeah, but no, it would have been there like basically back here. Yeah, that zone would have already been there, and then it's just kind of waiting for a retest. We went for it, just didn't quite get it. Very good question. Let's see. Did I miss anything? I think. Wait, hold on a minute. I did miss something. Wait, I missed a lot, I guess. Okay, so that was the one I just answered. Okay, thank you. Appreciate taking time to address it thoroughly. Of course, Travis. Absolutely, my friend. You know how I am. I'll do that to the best of my ability as long as it takes. Question: is there a difference between the 4-hour DBD yesterday and the one that took place at the high around 8/17/22? Okay, 8/17/22. Let's go to a 4-hour chart. Okay, so just to help you all recall, as I was referencing it earlier, that's where we went short yesterday. Yeah, and then remember this was the area we were trying to get to, down by territory, etc. I would just to be clear, I just want to throw this out there real quick because we're not usually here on Fridays. I am watching this like a hawk right now because on the larger picture here, if for all intents and purposes we get you know, a DBD, then I'm watching that very closely on the bigger picture. Okay, now that I've said that, you all understand exactly what I'm talking about. Let me look at, okay, so 8/17, so that's August 17th. From August 17th, that's way back. Okay, hold on a minute. No, if you remember that, we took that short too. Remember? You're talking about this one right in through here. Yeah. So, no, that's wonderful. If you, to help your recollection there, everyone who was in the room. So remember the last short that we took, the 4-hour one, this was it. And then we took one from just yesterday, and so on. Do you notice the consistencies there? Notice the consistencies. They're both after an enormous move up, right? Because what we're trying to do is catch the extremity. Remember what I was saying on that 3-minute chart. I'm looking to catch the tops and bottoms. I don't care what people say. You can't call the tops and bottoms and blah, blah. Yet we do it all the time. So that's exactly what I'm trying to do. What I'm not trying to do is predict, and this is what they're really talking about, I'm not trying to predict where that top or bottom is going to happen, right? I'm letting the market tell me, and then I, you know, here in the live room, just translate the language that's being spoken to me. But that's ultimately what I'm trying to do. So is there a difference between those two? The difference, I mean, no, not as far as the entry and so on, but let me go further. I will tell you that there is a difference in them. The one back here, it was much more probable, right? Let me say that a different way. It was higher probability that it would have a big move away from it. This one is not as probable as this one back here, but why do we suppose that is, right? It's because it's just lower. It's another pullback inside of this downtrend. Watch. If we go up to that weekly chart, which is where all of this derives from, remember the only reason I wanted to short the market yesterday was because of this, right? So the last time we took that short was here. The one from yesterday was here, but you can see how different this is, right? So we had this big down move. We've had pullback to go down, pullback to go down, pullback to go down, pullback to go down, pullback. You see how even hearing me say it that many times gets like, okay, I got the point, you know? Well, that's how the trends are too. we feel that way psychologically, and the more it happens, the more immune to it we become. So there was, so again, the difference between those would specifically be that this one had a much better chance of a large move down. This one has a much lower chance of a big move on the downside, right? I apologize that noise. They're cleaning the exterior and all that. But let me read the rest of your question, because I think there was more to it than that. Saying I'm trying to figure out if there is a case where a 4-hour DVD would have invalidated the 3-minute buy setup of today. Oh, okay. Yeah, I see where you're going with that. I think it would only, I think it would be only if the 4-hour hadn't come to a potential target area. So let me try to address. This is a really good question. All right. So first and foremost, I would put this. I'm so sorry. Give me just one moment. They should be. I mean, it's they're doing a great job, by the way. So that's nice. Anywho, all right. All joking aside, yeah. So you're trying to figure out. There is a way. There is a case in what you're talking about, but not this one. So if we took, let's clear the chart for a moment. The way that I would do that is right now. So I would disregard future 3-minute demand, buy setups, if you will, RBRs at the RVM, whatever you want to, whatever we're talking about. But I would go ahead and now start disregarding them. Okay, and think about this. You already know, you probably know what I'm about to say, but think about this right here, okay? What's happening right in here as we speak? And this is just the more recent highs here. If I open this up over the whole or entirety of the trend, you see how you're getting a consolidation there potentially? So think about this. If we consume that uptrend, why in the world would I want to be overbuying 3-minute chart? I'd want to be selling the snot out of it, right? So what I would then want to do is price start to break down, because now I'm short from the top. I've already caught the extremity, and I just want to sit back and do nothing. So yeah, you're on par. Your thought process is absolutely on par, as is almost always. So good job. But I would definitely not. This would not have done that, because all that one did was put you from sell territory into buy territory. Remember what we were talking about yesterday. If we consume the buy territory, forget about those small time frame buy setups. Does that make sense? What a great question. Some real logic in that right there. Awesome sauce. All right, let me go back and grab the rest of them real quick. I think a pretty neat option would be also to have trades be placed at new zones formed up inside that entry zone, like you have for the RBR and DVD inside the entry zone. Yeah. I see where you're going with that. So you're just trying to execute, on new zones that are forming inside of the area. Yeah, it offers a little bit more specificity. I mean, you can obviously accommodate that with the entry zone in and of itself. But yes, I do hear you, and that's something for me to ponder on for sure. Thank you for that, by the way. You went on further to say, yeah, you're talking about that option. You said, but I'm loving the new features. So thank you for all the hard. Yes, of course, good sir. Thank you. Yep, that makes sense. Absolutely, it does. I got you. It makes sense, and I'll definitely do some thinking on that for sure. Okay, folks, anything else that you all would like to discuss real quick? We can walk through. If you all need one more setup or anything, just let me know. Let's say right now that I wanted to, short the market, or rather buy them. I mean, it doesn't really matter, right? Anything you want to discuss. But if I wanted to sell the market, I could go either sell it or grab a DVD in there. And then I could go and I could turn on my entry zone, and I could do something like this, right? But I really want I want to enter inside of these new structures, inside of this rather new range. I should have said that. So I want to enter off of a DVD inside of this new range in the market that has formed here. Okay? Not down here. If we go down here, I have the expectation that we're going to now be in support, and we should actually bounce back up. I don't want to be selling down there. I want to sell up here, right? So buying after down moves, selling after up moves, etc. It's not that simple. Obviously, I'm not trying to say that it is, but it really is when you get into our training, I would say, right? I mean, how simple is the buy, sell, and nothing territory? It was so very straightforward yesterday for us to come in and say, hey, look, or let's go back the entirety of the week. Day before, we come in and we said, look, I get it. Right now it is feeling nasty and it's dropping and oh my goodness, you know, so on and so forth, but I'm going to remain objective. By doing so, I know that I want to be the buyer, not the seller. What ends up happening? Bam. Okay? That right there was Fed Chairman Powell talking, by the way. But we didn't know what he was going to say. We were saying we wanted to be the buyer back here when price was going down. What happens the next day? I want to be the seller. Well, that's opposite of what you said yesterday. Exactly. Because we got to where we needed to be just like that. So it doesn't matter. Remember, it's the location is what's important, and it's a matter of time. So if you can get me to where I need to be to do the opposite quicker, please do that. Have that knee-jerk reaction. What happened yesterday? We said, look, we want to be the seller, but that's all fine, well, and good, but I'm going to do it short term. I really want to turn around and be the buyer later today or tomorrow, whenever it happens. It just so happened that exactly as we said, it happened this morning. So you got to actually see the result from that one, right? So then I turn around and buy the market. So think about that. 3 days in a row, I wanted to be the buyer when price was moving down. The next day, wanted to be the seller when price was moving up. The next day, wanted to be the buyer again when price was moving down. And here's the result of all of that. We wanted to be the buyer here. We wanted to be the seller here. We wanted to be the buyer here, right? So, you know, again, there's more to it, obviously, but when we base it on our, you know, objective approach and we do keep to that, that's when we do the best, right? I can tell you from massive experience, I have really, you know, I've made some big mistakes when not doing that. So if I don't remain objective and follow suit with it, it just never goes in my favor. You know what I mean? Kind of feels that way. So long time ago, I learned, stop fighting it. It's like the Fed. Don't fight the Fed. Well, don't fight what you know works over and over and over. And that's when we come in and we say, look, we don't want you to trust us, believe us, any of that. Just watch. Seeing is believing. You'll see this, which in my opinion is amazing, right? But you make your own opinion. Over time, it is astonishing at how the market's behavior becomes so consistent and yet so simple. How does it keep doing this over and over and over? And yet we cannot wrap our mind around it. It's like, I don't even know. I've yet to be able to figure that out, but that's what we do. Okay? And we only do that in investment trading, if you will. We don't do that in real estate. No, everyone knows you go out and you try to buy low and sell high, right? That's common sense. But then again, we put it on a chart, and all of a sudden, I'm conflicted, you know, because price is going down. Well, yeah, buy it low. I mean, you know. Anyway, it's all joking and fun. I hope that makes sense. Let me get through these. If there's any remaining questions, and we'll rock and roll and end on the day. Sorry, but I missed when you said. Oh yeah, that's what I didn't. That's what I was saying. Probably in a few days. Sorry about that. All right, any further questions, folks? And I'm going to run on. You have the discounts, right? Does everyone have that information from yesterday? If you don't, remember, and I'm not just trying to, well, I hate to even say it like that because it kind of feels like a pressure tactic. It's not, but I'm just telling you how it is. That's it. There are not going to be any further discounts. So through the year, I mean, we don't have any further discounts planned, anything like that. And honestly, even going into next year, there won't be probably very many. So anyway, take from that what you will, but I promise you it's not a pressure tactic. I'm just letting you know. If you need that discount code, though, or anything, just let me know. It discounted I think you saw them from yesterday, but that was the yearly and the lifetime community, as well as the software. Okay. Thank you, Will. Much appreciated. Have a wonderful afternoon, and hope to see you again as the software develops. Yes, absolutely. Absolutely. We're here, as always. All right. I think that's all the questions, so I'm going to end on the note here in just a moment. But if you have a question, put it in there real quick. Otherwise, I need to run on about my day, and maybe I'll get a trade. We'll see. All right, folks. God bless you. Thank you for your time. Have a wonderful, wonderful rest of your day and weekend. I really hope something great happens, and especially coming into the holidays, I think probably everyone needs a lot of cheer, I hope you find it. Take care, everyone. Bye for now.